All right, let's dive in. Today, we're going to pull back the curtain on the financial markets and look at the invisible machinery that makes it all tick. We're talking about custody services, the system that quietly and securely holds trillions and trillions of dollars in assets all over the world. And it all starts with one pretty simple question. So think about it for a second. You log into your brokerage account, you find a company you're excited about, and you hit buy. The money vanishes from your account, but what happens to the stock? That little piece of a company you just bought, where does it actually go? Is there some digital vault somewhere with your name on it? Well, here's the thing that might surprise you. It doesn't actually go directly to you. Instead, it's put into the care of a custodian. You can think of them as these silent, hidden guardians of the financial world. Their entire job is to protect your assets. And they're the main character of our story today. Okay, so in this first part, let's get to know this guardian a little better. What exactly is a custodian? And what do they really do all day? At its heart, custody is a really specialized banking service. It's all about holding, safeguarding, and, managing the paperwork for financial assets. And they do this for huge clients. We're talking investment funds, pension funds, insurance companies. What this does is it separates the management of an asset from the safekeeping of it, which, let me tell you, is a huge deal for minimizing risk. So their job really breaks down into three main buckets. First up is safekeeping. And we're not talking about some dusty old vault here. This is all about securely storing securities in a digital book entry form. Second is asset servicing. This is all the administrative grunt work, like collecting dividend payments for you or handling really complex events like a stock split or a merger. And finally, there's settlement and clearing, basically making sure your purchase or sale of a security actually goes through correctly and gets finalized. Okay, so we've got a handle on what a custodian does, but how do they do it? To really get it, let's follow a single transaction from the very beginning to the very end. We're going to go on an asset's digital journey. All right, picture this. You're a big investment fund, and you want to buy 10,000 shares of a company. Step one, boom. You fire off an instruction to your custodian. Step two, their system immediately kicks in and validates everything. Is the order right? Is the cash there? Step three, the order gets sent to something called the Central Securities Depository, or CSD, which is where the final official record gets updated. And then step four, your portfolio updates, automatically, instantly. The whole thing is just this seamless, super fast process. So what's the magic that makes all this happen so fast? It's a concept called straight-through processing, or STP. And all that really means is that the entire process is automated from end to end. There are no humans in the middle slowing it down or making mistakes. In the world of finance, where millions of these things are happening every second, this kind of automation isn't just a nice to have, it's absolutely critical. Okay, but how do all these different systems from different banks in different countries, talk to each other without messing things up? Well, they use a universal language. The most famous one is called SWIFT. These are standardized messages that make sure an order to buy that was sent from New York is understood perfectly in Tokyo. It prevents any very expensive misunderstandings. Now, this is a really, really important point. While your custodian is managing the whole process for you, they're kind of like your agent. The ultimate source of truth, the final legally binding record of who owns what, is held at that Central Securities Depository, the CSD. Think of the CSD as, well, it's like the official deed office for financial assets. It's the master list. That whole digital journey is already pretty amazing, right? But it gets even crazier when you start investing across borders. And that brings us to the Global Custody Network, the system that lets money flow smoothly all around the planet. So how does a big fund in London invest easily in, say, Brazil? They use a global custodian. This gives the client one single point of contact for the entire world. But to actually operate in Brazil, that global custodian partners up with a local bank, and we call that a sub-custodian. They're the ones with the boots on the ground, the local expertise, and the direct connections. It's a global network built on these local partnerships. And this right here, this might just be one of the most important safety nets in the entire financial system. It's called segregation of assets. It just means that the assets a custodian holds for its clients are legally separate from the bank's own money. So what does that mean for you? It means that even if the custodian bank itself went bankrupt, your assets would be safe. They don't belong to the bank, they belong to you. It's a huge protection. And as you can probably imagine, the level of scrutiny here is just immense. This quote really says it all. Every settlement operation must have a full audit trail showing who initiated the action and when it was completed. Basically, every single move is tracked. Every single one. It's absolutely essential for regulators and for preventing any funny business. Okay, we've gone through the what, the how, and the where, but now let's bring it all home and answer the big question, so what? Why does any of this matter to you or me?
Well, it really comes down to these three huge benefits. First, and this is the big one, it keeps everyone's assets safe. It seriously cuts down on the risk of loss, theft, or fraud. Second, it just makes life easier for the clients. Investment funds get to focus on investing, and they can outsource all that complicated back office stuff to the custodian. And third, it opens up the whole world. It enables that seamless global access, connecting investors to opportunities pretty much anywhere.
But underneath all of this, the number one priority above everything else is something called fiduciary duty. And that's a fancy term for a simple idea. It's a legal and ethical requirement for the custodian to always act in the best interest of their client. It's not just a business deal, it's a position of incredible trust. And, this world isn't just sitting still. The future is already knocking on the door. Banks are seriously exploring technologies like blockchain and distributed ledger technology, DLT, for things like asset tokenization. They're looking at ways to create digital versions of assets, which could totally change how they're bought, sold, and settled in the future. Which leaves us with a really interesting question to chew on. As all kinds of assets, not just stocks, but maybe real estate or art, get turned into digital tokens on a blockchain, will the role of this hidden guardian, this trusted custodian who keeps our stuff safe, will it become not less important, but maybe even more critical than ever? Something to think about. Thanks for tuning in.